Hi, I wanted to thank you for joining me on this episode of Doing Insurance Right. My name is Scott Jenkins. I'm your host. I'm a local farmers insurance agency owner here in Phoenix, Arizona. And today I just wanted to talk about, kind of revisit a topic we've talked about maybe a year or so ago, is how much insurance do I need? This one to me is it's all based upon what you currently have and things of that nature, but it just kind of give you maybe a simple breakdown of how much insurance you may need. A lot of people have the same insurance coverage maybe that they've had for the last 20 to 30 years. I promise you it's probably not the same as it was back then. But you just want to make sure that you have proper coverage to ensure the things that you own and have. So the first thing we want to do is we want to look at the four major things that you would, if you were to be sued, you would have to present a deposition. And this is basically going to show you how much coverage you're going to need. So the first one is going to be if you own your own home or homes, figuring up the equity in the home. So basically, equation works like this. What do we think we could sell the house for? Basically, what are the comps maybe in the area on what things have sold for? And you can look this up on Zillow or anything like that as well. And then if you owe any money on the house, if you have a mortgage, how much is your mortgage? So for example, let's say Zillow says your house is $300,000 and you owe $200,000, you would have $100,000 worth of equity. Okay, so now let's say you owe zero on that $300,000 house. Now you have $300,000 that you have to cover there. So, and this goes for all the homes you may have. So if you have multiple homes, let's say a seasonal home, or for example, if you have rental properties, things of that nature, you're going to have to put all of those homes in that category there. Okay, the second one we're going to look at is going to be any cars, motorcycles, ATVs, like mechanical type things that, bigger ticket items like that. Or if we have some high priced jewelry or things of that nature, like I know people have Rolexes or fancy watches, expensive wedding sets, something to that effect. You're going to take same thing applies as we did on the house. So we would take the value of that, and we could use Kelley Blue Book, for example, on that end if you want, for cars and motorcycles, things like that, and then minus any money that you owe. So for example, if you have a $30,000 car and you owe $20,000 on it, you have $10,000 worth of equity. Okay, so that's going to apply for all vehicles and then all things you own, that bigger ticket items. The third one we're going to deal with is a little bit touchier one, and this one's investment dollars. And this is going to include a lot of different things. Cash on hand, so checking, savings, money market, IRAs, 401ks, 403bs, any stock portfolio, any additional things that we might have set up investment-wise, and what is that total dollar amount? So if you have $100,000 in your 401k and nothing else, let's say, but maybe $5,000 in cash on hand, then you would have $105,000. So just getting all those amounts of everything that you have. And then the last one's going to be, and this one varies state by state, but basically your gross annual income. So your gross annual income, so let's say you're married, you both work. What's the gross annual income before taxes for both of you? So as the state of Arizona reads that they can garnish up to 25% of gross annual wage up to 10 years. And if the judgment's still not met, they can do it for another 10 after that. It's pretty rare when it would be after the 10, but just to keep that in mind. So for example, let's say you make $100,000. You take 25% of that's going to be $25,000. And then we're going to multiply that times 10. That's going to give you $250,000. So as you can see, coverages start to add up really, really fast on the amount of coverage that we need in order to make sure we're safe when it comes to, when we get sued, that the insurance is going to cover it. So, and when we look at a lot of things as well, so for example, let's say we have $100,000 equity in the house, we've got $30,000 equity in the cars, we've got another $100,000 basically in investment, and then we make 100,000, so that's going to be 250,000 total over a 10-year period. Roughly you're at about $500,000 already that we need to make sure we're covered for. And the area that you're going to want to make sure that you have this coverage for is going to be in two different areas. Number one is going to be on the car. That's going to be your bodily injury. I'm sure everybody has seen a personal injury lawyer commercial, ad, billboard. They're everywhere. Why? Because there's a lot of money in it. It's a very saturated field. There's a lot of people that are in this particular field because it's very lucrative. So, for example, if you have $500,000 worth of stuff to protect, I'm sure you would want the insurance company to pay for that. So, therefore, you need to have $500,000 worth of coverage. Now, if you go over $500,000, you need to have that. Or if, let's say, you have $100,000, $300,000 worth of stuff, then you need to make sure you have that appropriate coverage. But that can change all the time. Let's say we get a bump in salary. Let's say we inherited a little bit of money. Let's say we paid off our house. Whatever those may be, or the house alone does go up typically in value every year. There has been exceptions, obviously, with we've had a recession in the last 20 years, things of that nature. But overall value is going to go up just because of inflation. So therefore, your coverage should probably go up every time as well. Now, it might not be as big a jump as going from $100,000 worth of coverage to $500,000, but it might be from going from 100 to, let's say, 250, and kind of going through there. Here's the other thing with insurance. So your price doesn't double because you double the amount of coverage. There's going to be a base amount of price-wise on your policy anyway. So looking at alternatives, it's not going to cost you a fortune, I would think, to go up a couple steps or a couple of ladders, rings up the ladder when it comes to coverage. But what you are doing is not putting yourself at risk. So let me ask you this. Is it more important to keep the price down on a policy, or if you happen to get into an accident that was your fault, and they happen all the time? And it's not necessarily because you went out there to prove or to drive into somebody. It was an accident. That's what it's an accident. You weren't purposely trying to go out there and hurt somebody. But let's say, something happened, you hit somebody, all of a sudden it's, $700,000. You only have $100,000 worth of coverage. How do you plan on paying for the additional $600,000? The insurance company's not going to feel bad for you and dump on an additional $600,000 worth of coverage when that's not what you paid for. So that's one big thing. Whether you go through an agent or you go through 800 call center, you should be able to justify how much insurance you actually need. Or if you're doing it all online, you want to make sure that you have that particular coverage. Now, a lot of people are saying, well, I don't go during the COVID times, I don't go very far. I'm only going to the store. Most accidents occur within a couple miles of the home. And if you're getting on a regular street, you're at least doing 25, if not higher. It does not take that much speed in order to cause injury to somebody else on an accident. So just keep that in mind. The other place where it's going to pull into play is going to be liability on your homeowner's insurance. So if somebody was at your house and got injured, or let's say you have a pool, this is a big one all over the country. Arizona, there's almost a pool every 2 homes. This is a huge one here. You know how many times we hear of kid drownings or something to that effect? You may be a best of friends, but when money comes into play, a lot of times that can be shot out the window. So making sure you have enough coverage for things of that nature, something that can happen at your home or something that happens on the car. Now, if you have a business, some other things, then there's other things that have to pull into play. But the majority for most people is going to be the home and the car. So making sure you have enough coverage for those two particular areas is extremely, extremely important. Now, there are other ways to save money. That way costs don't get ridiculous on the policies. Maybe we take out some of the fluff type coverage where you're responsible for that, but it does save you quite a bit of money. So just make sure you keep that in mind. Just because we have to go up in coverage in order to protect what you work so hard for doesn't mean we have to sit there and drive the price of it up. And that's not at our agency what we're trying to do. What we are trying to avoid is this. You got into an accident, somebody got injured, and all of a sudden now you are way undercovered. Who wants that to happen? I don't want to have to make that phone call and go, you're only covered up to $100,000, and they blew through that in the first day. That's not what we're looking for whatsoever. So just keep that in mind when we're looking through coverages or trying to gauge on how much coverage we need. And like I said before, it's not that we're trying to sit there and make $1 million off of you, but I do want to make sure that you are properly covered in case the worst happens. I mean, that it's always a bad day, maybe when the insurance bill comes due, because it's a little bit more money, but isn't that better than actually having a bad life because everything you worked so hard for is completely gone now because of a lawsuit? So I wanted to thank you for joining me on this episode of Doing Insurance Right. As always, if you could rate, review, or subscribe to whatever platform you're listening on, whether it be Spotify, Apple, Google, or any of the other impressive platforms out there, we'd greatly appreciate it. And I look forward to talking with you on the next episode.